Should we expect more of these yieldcos in the future?
I think it's fair to see two. One for OECD, one for emerging market. But to do more, it's going to take some time because you need enough volume, enough growth. So I can see maybe something in residential, but 2 years down the road.
Okay, so right now you could see the potential for 3 in total.
There's a chance of that, but it's going to take a while.
Right. And in terms of, because obviously the attractive thing for investors for any of these yieldcos is the dividend, right?
Yes.
The payout. So what sort of risk do you see, if any, in a rising interest rate environment? And how much more will you have to pay investors to compensate them for the risk of an OECD or emerging markets?
Yeah, I think we can absorb some interest rate increase, maybe around 200-300 bips. That we can absorb. And we have a very high growth. So if you think about it, it's a very attractive proposition.
The other component to the story, or the investment case, is the lower cost of solar over the years. Over the past 2 or 3 years, it's gone down, what, 50 to 60%?
Yes.
And you yourself have been developing new polysilicon technologies, which will lower the cost. You're looking into building a plant in China, which would also lower the cost. Where do you see it going? Because I think when investors hear about a race to the bottom in terms of pricing, they get concerned about past busts in solar.
Yeah, so lower costs help a developer like us. We are about brand and consistent cash flows and signing contracts and building a business model more with software. We're not a module player. We try to control the cost of modules, but we are not a module player. If you're a pure module player, then you're a commodity player. And you can see it in all commodities, steel, memory chips, all that.
So your main business is commercial and I guess government and customers, but how early are we in the adoption of commercial properties?
Very early. Very early. I think, first of all, the cost has declined 80% over the last 5 years. It's going to decline another 70% by 2020. So the cost of solar is going to be 4 or 5 cents a kilowatt hour, which is below gas in most places on Earth. And it's going to go down from there. It might go down another 50% by 2030. So we're in the beginning. There's enough rooftops in the world to do multi-terawatts. So just the beginning.
And just going back to not being a module player and lowering costs, et cetera, the ripple effect of guys like you, a vertical player, manufacturing, what is the impact on the industry overall? Will we see people forced to go out of business because you're lowering the cost so rapidly?
Well, look, any business has to make money. And if you think you're going to have a factory in the US or Germany because the Chinese will never have good quality, you are just wrong. If you look at Huawei, it is so sophisticated company. Doing a panel is a lot more simpler. So the people are getting out of business is people don't have clear thinking.
You need to reduce costs quickly, I think, before the ITC tax change. Can you get there quickly enough for that 2017 deadline?
The answer is yes. The cost is not the issue. It is the utility business, which is around 20% of our business, which is utility North America. Utilities ordered a lot of projects by 15 and 16 and almost zero in 17. So because of that, that's their issue. So if you're a pure utility company, you're going to get crushed, in my view. The rest of the business is going to have very high growth. And for us, internationally and DG, residential, all that's going to counteract that utility business. Because that utility business today is a couple hundred megawatts, but by 2017, it will be a much larger company. So 200 megawatts doesn't really move the needle for us.
You've had activist investors in the past. You've had one since a long time. It's called Altai Capital,
yes.
Right? And he's still on the board. You've got Einhorn. Do you like having these hedge fund players?
Very much, very much. If you look actually, the challenge that we had when we were transforming the business is that the board didn't understand clearly what we're trying to do. We want the owners to be with us at the board, and we're very transparent. We invite all our board members to the leadership meetings, strategy meetings. So having these people help us on everything. If the data is clear and the thinking is clear, why fear anything?
All right, Ahmad, thank you for coming by. I appreciate it. Hope to see you soon. Ahmad Chatila, the CEO of SunEdison. You're a shareholder.
Shareholder, yes.
Since?
Long, I don't know, 6 or 8 months. You know, it's had a difficult run. It's traded down with oil, even though we were talking in the green room. It shouldn't, but it
Right.
does. I think it's an opportunity here.
Yeah, I think people look at it, investors simply can look at some of the parts, and if you look at the sum of the parts based upon TERP, this thing is a $25 to $30 stock. If you look at additional catalysts, there people think they may even go non-solar, geothermal, biomass, wind. These are places that people think if they up their credit line, these are other catalysts. I think in the short run, though, you can add the value up on the stock and say it's worth owning now.
27% short interest. Einhorn's obviously a pretty clever guy, as is Karen Finerman, a pretty clever gal. So I think given the sell-off, the stock for a trade is pretty interesting right here.
All right, quick programming note here. The Halftime Report has an exclusive interview with Greenlight Capital's David Einhorn and his latest thoughts on SunEdison. That's taking place tomorrow at noon, so you won't want to miss that. Well, Apple's trading up in the after-hour session.